Hello traders, here Chris Capri, SecondSkiesForex.com. I have a few live price action trades that are running right now, so I wanted to share with you a couple of them. My entry, my method for getting in, my stop loss placement, my take profit, why I chose these things, to give you an idea of how I trade and how I teach my members to trade in the advanced price action course. So before we get into the trades, I just want to show you right here, this is a live account. I'm trading with my own money right now. This says real. If it was a fake account or a demo account, it would say demo. So just to let you know, I am trading with my own money. And as you can see, these are moving in real time. Everything matches here, 109 pips, 109 pips, so it all matches. And so I'm in the market live right now. I've been in since December 3rd, late last week. So this one is actually a relatively straightforward trade. So dollar yen has been in a bullish run as of late after it broke out of a large range structure, formed a nice impulsive leg up, and then it formed a corrective structure, which is outlined in this blue box here. Now, these structures are very important, and this is important for understanding price action context. Generally, when an impulsive move happens, like we have here, the next move is for the market to form a corrective structure, which is like a balancing phase. And as long as the price action context and the bulls are still in control, then I'm expecting this to play out with an eventual move to the upside. The great thing about corrective structures, especially in bull trends, is that they offer you with trend opportunities to get long at the base of the corrective structure. I actually had a trade set up right here before, but I missed it by a couple points because I was basing it off these lows here. So when the market came back again, I lifted it to just at the bottom of this low right over here to get myself into the market. I did not wait for a price action confirmation signal, even though this formed a pin bar. If you'd waited for a 50% retrace tweak entry, you would have missed it. And so I didn't wait for one here, and I just placed a limit order to get long at this level, assuming that the price action was going to hold, the context was correct, and that my trade location was good. Even in this one here, this did form a pin bar. The thing about it is if I did wait for a 50% retrace tweak entry, my entry would have been poor. It would have been higher up, and I would have had less profit available to me. So this is important to understand. This is part of the reason why I don't trade with confirmation price action signals. They give you worse entries. They give you retail entries. Sometimes you'll miss the same move completely, a perfectly legitimate move. And they also give you lesser profitability. Now, in terms of my stop loss placement on this one here, this is very straightforward. So in this recent run up, we had a move up here, it paused back, and then a big breakout bar. My real reason for getting in the market was the base of this structure holding. So I want to place my stop loss below this here. How much? That kind of depends. Because I was getting in before NFP, I had to expect some volatility. So I didn't want to keep it too tight. So I put it just below this here, a little bit below that. It's about a 51 pip stop. Here I'm in at 22.32 and the stop is at 21.81. So I have about a 50 pip stop, and I'm currently up about 109 pips. So I'm up a little over plus 2R. And as you can see, the trade never really went into the negative. It just happened to be a really good trade location. Does this happen all the time? No, it doesn't. Sometimes trades are not ideal. In fact, I'm going to get into one right just shortly after this. Real briefly though, if I was, in terms of my take profit, if I was trading this range structure, I should be getting out right about here with a nice plus 2R profit, and that would be it. But I'm anticipating a breakout. If I'm wrong, I'm willing to take some profit off the board, bring my stop to break even, and hope for a breakout. And if it comes back down here again, I'll buy it again, assuming the range structure is going to hold. My target is actually a little bit higher here, just above 125.25. So with the 50 pip stop and a 300 pip target, that's a plus 6R potential on the board. Now, the next trade I'd like to show you here is one that's not a perfect entry. It's a kind of trade that wasn't textbook, and I'm not saying it's easy. A lot of trades are more like this one right here. This is the dollar CAD. So dollar CAD also in a nice bull run. We have an impulsive corrective, slightly choppy move up, and we form a double tap here. So I'm looking to get long, and I can either get long in a pullback, but I missed this one here. Once we broke out, I was expecting this resistance to hold. So I just bought on a pullback. I didn't wait for a signal. I just bought on the level assuming it would hold. It didn't. Luckily, I was right on two accounts. One, I was right that the bulls are still in control, and so I want to be more long than short. Two, I was right on my stop loss placement, which was below this swing here. So I placed it below the swing because I felt like if the bulls are in control, they shouldn't make it back into the range too far, and they shouldn't make it below where the swing had started. So with that being said, it turns out I was right. And what ended up happening was the pair ended up forming kind of a channel-like structure, an ascending channel. I didn't see this at that time, and it wasn't fully formed at that time. But as I have reevaluated, I realized, okay, this is actually what's really happening out here. So if I'm correct, the channel structure should hold. It should continue to drift higher. And if I'm right, it should break out. And that's what it did here recently. I could have bought on the bottom of the channel, but considering that I spent a huge majority of the time in the negative and only a decent amount of time in the positive, maybe 40% of the time, I really didn't feel like adding on to a loser. I generally like to add on to winners, not adding on to losers. So with that being said, it turns out I was right on this. It turns out my bullish price action context read was correct and that my stop loss placement was correct. And so in terms of the trade right now, it's up 132, 134 pips. My total stop loss on this one was about 110 pips. So with 110 pips, I'm up about plus 1.25 right now. In terms of where my take profit is, that is way up here. So with that being said, it's at 138. And 138 is about a 450 pip target with about 110 pip stop. So it's about a plus 4R on this one here. And so the reason why I'm showing this one is I want to show you an example of a trade that's not textbook and that's not perfect entry. And so, the bottom line is that the majority of your trades will actually be more like this than the dollar yen trade. And these are the trades that challenge you the most mentally and psychologically. But I trust my price action context, I trust my skill set, I trust my mindset, and I trust my read on the market. And so I was willing to let this trade play out. And so I wasn't sitting there worried about, am I going to get stopped out? What did I do wrong or anything like that? I just let the trade run. I held my stop loss as is. And either I'm getting stopped out or I'm going to make some money on this one. And right now I'm making some money on this one. And so with that being said, I'll probably start neutralizing the risk very shortly. And I'll probably bring it up either under one of these swings here, maybe even to some profit since we've broken out of the structure. And so with that being said, this is how I trade. This is how I trade with my own money. And this is how what I teach in my advanced price action course. So with that being said, if you are interested in trading like this, then make sure to come check out my advanced price action course where I give trade recommendations like this several times a week. I teach you the same methods I use. I teach you the same entry techniques and strategies, how I place my stops, how I choose my targets, and how to build your price action skills. So I'm not just teaching strategies, I'm teaching you how to build your own price action skill set, so that you can learn to make these decisions yourself, find these trades yourself, and make money trading. So if that sounds interesting to you, make sure to check us out. Also come by secondskiesforex.com and take a look at all the other videos and articles we have on trading. With that being said, I bid you all adieu. I wish you good health and good luck trading, and I hope to see you in the course. Take care, everyone. Either way, I'm in at 66.25. So I have a 320 something pip target right now with a total 30 pip stop. So we're talking about a plus 10R. Again, you don't need huge stops to make trades like this. You shouldn't need huge stops if you get really good trade location and really good timing. And again, these are methods that I teach in my price action course, which you can make these trades yourself. So that would be a 250 pip profit on a 34 pip stop. So we're talking about a plus 8R. Briefly, I want to talk about the entry in terms of how we place the entry and time and everything like that. So, and then we'll wrap this up. So to make sure we didn't place any confirmation price action signal. We don't wait for confirmation price action signals. Those lower your accuracy, they lower your profitability, and they give you worse locations.